Hello guys, welcome back to my channel. This is the one and only Jesus the Great, and today we have another spanking video for you. But before we get into the video, you know what you have to do? Like the video, preemptively like it because this is another banger. Preemptively like it. If you like what's going on this channel, if you need help with navigating the markets, stock market, forex market, futures market, whatever markets, if you are trading the indices, for example, if you need help with that, I think you should consider subscribing to this channel. So this channel has so many in-depth strategies, mostly technical, but I'll be delving into some fundamental um, analysis trading strategies, for example, which can help you, can help the average trader, help the beginner, help everyone, improve their crafts in the market and make more money. Um, oh my God, no. So without further ado, let's get into the video. I hope you can subscribe. Just subscribe. Yeah, hit the subscribe button. Click the bell for notifications. And without further ado, I want to get into the video. So this is a flag pattern, and I'm sure most of you guys who are just above beginner level can identify what this pattern is. You have price, probably in a trend, always in a trend actually, always in a prior trend, is always moving a certain direction. And then what price does is that it contracts and it starts moving in the opposite direction just for a bit. But you can see that with the pattern, for example, like when you're having these kind of short-term retracements, and let me try and highlight this with the rectangle. You see, when you're having these short-term retracements for a bit, if you will notice the candles inside that retracement are weak. Um, you have very few very few candles that are showing like very great momentum. For example, you have very feedy candles, and it's like a consolidation of its own, and it breaks a high and it can't keep going, and also for a low, it breaks a low and it can't keep going so much, and it's just moving around, moving around, moving around. In that case, you want to draw the channel. You want to try and channel these things, and this is what we call a flag. So this is a flag going down. This is a flag going up. The flag going up is what like mostly known. Also, you can also call this the bearish ascending channel, for example, where that price making these highs after a strong downtrend, for example, and making these highs, and then you break. So the way I trade this strategy is a bit different from most people. I've seen a few videos on YouTube. Actually, a lot of videos on YouTube on the flag pattern, and most of them make the mistake of going for a one-to-one profit. Okay, and in my eyes, like how is maybe changing the risk to reward going to fundamentally change the strategy? Well, I will show you guys in my back testing, or like in a demonstration where we test at least a month's worth of data. And hopefully, if I get 100 likes, we'll be testing like way longer time frames, for example. But just showing you that over that time period, like if you have the 2:1 risk to reward ratio, which is what I have, right? I risk $100, but I expecting $200 in return, for example. Um, if you are using that, you have a way better return, because one-to-one is not good. And also the entry criteria for most people, it's like the entry positions. That's where also I see people making mistakes. And I think in this video, if you are able to watch and follow where this video wants you to go, you'll be able to understand how well you can use how better you can enter the market for this. So for me personally, I I enter based on the break of the neckline, right? So you see you have this movement up, and it could be even multiple other movements, right? But when we have one of these lower highs, for example, the bearish ascending channel, or the bearish flag, when we have one of these lower highs, right? One of these lower highs, sorry, the lower lows, sorry, one of these high lows, when we have one of these high lows broken down by price, that's why I want to enter, right? So we have our buy here, for example, and let me use this text to show you that instead of buying, we rather sell, sorry. Um, sell in this position, right on this break. That's why we are selling. We are having a stop loss maybe somewhere in the middle here, so that if price is able to retrace just a bit, and depending on whichever structure is over here, let me highlight it with the rectangle. Depending on whichever structure is over here, you put your stop loss there. You put your stop loss just above whatever structure that is here. Instead of putting it all the way at the high, so you reduce your risk and you increase your reward, for example. And also with the buys, if you have this kind of move, for example, and it might even be multiple zigzags, but when you have one of these necklines broken, right, these lower highs, excuse me, if you have one of these lower highs broken, this is where you want to buy, right? You want to buy, you want to put your buy stop or your buy order there. And let me use a text to highlight your buy level. Buy, apply, and then you also have your stop loss also in structure. It's usually safe to have your stop loss all the way down here and even all the way down here. For example, like at the end of the retracement, it's safer that way, but you just have to understand that you are having more risk. But if you are keeping your risk to reward 2:1, in the end, over the long term, you'll be making more money. Same goes here. If you want to stop all the way here, I have no qualms with that. But if you can look for structure, for example, and put your stop loss just below it, that will also be a very good way of doing it. So without further ado, I want to get into a few simulations. I hope you guys can like have these structures in mind. Have these structures in mind, and I have this on the thumbnail, like the demonstration of these flag patterns, and hopefully you can also reference that in your trading journey. But after looking at a few of these examples, and I think I'll go after about like maybe a month's worth of data. So let's see, maybe I don't know, maybe 5 or 10 trades. At the end of that, you guys will be able to see the power of like these kind of changes, these entries, race to reward, and what it does, even on a $10,000 account, for example. So without further ado, let's get into it. So I'm using Forex Tester 3. If you are not really familiar with like how this platform works, then I'll probably need to make a video on that and help you guys to know how to do it. I'm just an unregistered version, so it's in this demo. So you can even only backtest for a month. I haven't paid for this one. You have to pay for Forex Tester subscription. I've paid for Forex Tester 4 and 5, but I like Forex Tester 3 because of its retro look, and also it being on the demo, it's easier for me to just load up in a month, and after I'm done, I don't need to create another project again. Just go through it easily. Not needing to store much data. And your Forex Tester is a very good backtesting platform. This is like data from 2004, so it's very helpful. We are on the 30-minute time frame, and we see price just making highs. The price is just moving bullish, and we are waiting for our flag. Right, we have a time where price is retracing like this here, right? We have these two highs. We can connect them, and then we probably have something like a flag here, right? And let's go back a few candles, right? So on the break of this structure, right, this neckline, in the break here, you could probably have your buy stop, for example, over here, just anticipating that break, right? You anticipate that break and you buy 35 pips, and then you have your excuse me, have your take profit about like a lot of pips away, like 70 pips away, because it's 2 times what you are risking. So like if we were anticipating that one properly, would have been in and then would have cashed out here, right? Like 1,456 on a 2 lots on a $1,000 account, a $10,000 account. So that's not so bad. So you just want to connect like two highs for whatever downtrend is like happening, and then you follow it from there. And again, this is a level of interest because we have this structure, but I have this lower high, and price is already even tapped into it. But if price is going to continue, we can have a buy stop here, have a stop loss, maybe just down here. You can hide it in structure depending on how you want to trade it, and then um, you look for a move up. Basically that. So buy stop 2 lots at that level. Just have a stop loss. Just like structure. Just structure this a bit. And then yet to set my TP. Okay, but price, I guess we didn't get triggered. It just kept moving down. So that's a lucky one. And I guess we have to readjust and draw a flag again. But let's see what happens. I don't know if I should even delete this order. That's interesting. But let's just wait. You can still have the order there because that's like a level of interest in case we have. But it seems we are in a downtrend, so it makes sense, closing now. Hold on. So now it looks like we're in a downtrend. But you can also be looking for buys still because it looks very strong in an uptrend. But let's see if we can look for any bearish opportunities. Oh my God. And we had price, and let me go back a few candles. And we had price just, complete our flag. And I wasn't even expecting that again. But again, if we still had our order here, which was what we're supposed to do, we're supposed to still have our order here because we are still expecting, because still an uptrend. We didn't get any sell opportunity, but now we do have a buy opportunity, and the prices at this juncture again. Forgive me, I have to press this. It's easier when you are trading, with every 30-minute candle passing by, but if you are pressing it every 10 seconds, it's kind of hard to follow. But I do my best. So you guys can see every example. We have a buy here. Let's hope our price keeps going. And this is a possible flag again. I have this and these. But if it keeps going down, then it's a downtrend. And then we have a break of this structure. So if you are interested, you could also buy here. And I'll probably I'll just buy there. And you have a stop loss down there. And price is already down 1-to-1. So once price does 1-to-1 risk reward for, especially this second entry, you just want to, secure some profits. That's what we do so that we don't lose money in the market. Especially on winning trades. And if I fail to mention that, which I think I did fail to mention that. But how we manage our trades is if like price moves 1-to-1 on a trade, you move your stop loss to break even or just secure some profit. Yeah, that's basically it. And also the larger trade also has like down 1-to-1, so you can secure some profits. I think I'm going to secure about like 50 pips on that. So like I'm in 2 risk-free trades. Let's see how far prices go. I think, and let me go back a candle. I think the smaller trade has hit take profit already, if I'm not mistaken. And let me go back a few candles just a few candles. I need to reassess how much we're originally risking. 550. So it's already even surpassed like where we'd be taking profits. So I'm sorry I didn't say they take profit, but yeah, that's what happens sometimes. And also, so for this one to take, we'll have like 3,000 pips. Oh, we've already hit that. Let me go back a few candles so that I can set that order before you guys see it. So we're initially risking about 1,500 points, which is about 150 pips, and so about 3,000 and 300, 3,000 and 130. This is where points. It's where our entry I take profit is, for example, and I think that's like more than 2:1. So just a bit more than 2:1, so it makes sense. If like that was your take profit, for example. So yeah, we've had three different flags. I think we had one here. Unfortunately, I didn't take that trade, but it would have been a loss. So I think that's fortunate. But then again, it's kind of unfortunate. I should have done that so you guys can see. But hopefully we'll get a chance to have another trade. And it looks like we can have this, right? So if you are considering a flag in this sense, right, right, we'd be expecting to buy off of here. Excuse me, rectangle. If there was a break, maybe a place like here makes sense. You buy and then have a stop loss below. But also, apart from that, we can also see that there's kind of like a downtrend in this channel. So what we want to do is we want to draw our ascending channel again. Our bearish ascending channel, or our bearish flag. And then we have this, right? You can see this structure. Right, there's a move up, down, and then there's a break of this neckline. So I kind of see that we should sell. Stop loss just above structure. Risk reward, we're risking 80 pips. Right? So yeah, having a profit target of about like 160 pips. And we price hits our stop loss. So. And again, we have the ascending channel. The structure still looks valid. And if you guys can see, let me try and increase the size so that you guys can see. We still have one here, right? Still ascending channel. And we are having a break of the neckline over here. Let me move this here. Having a break of the neckline over here. Let me move this here again. So now having a break of the neckline again, we can sell. Stop loss. My stop loss is in structure. We are selling 2 times the risk to reward. That's basically it. And I haven't set my TP yet, but it's always essential that you set your stop loss. The TP comes, second if you are considering, swinging trades like I usually do. And it's not even easy to show it on these charts when have to decrease and increase so many things. So 7, 8. So this 160 pips in profit kind of makes sense. I think price has already moved like 60 pips in our favor at the most. This and it's already moved like 1-to-1 now, about 1-to-1, so we can like secure some profit. I just hope price goes all the way to our TP, but we can just never be sure. And it hits our stop loss. And again, we have another ascending channel here. For those who can't see it, right? You see, we have this channel, move up, move down. And if we get a break of this, that we are breaking the neckline and are selling. Stop loss. You can have it here in structure. You can also have it all the way here. I'll have it here just in structure. 150. It's not bad now. So stop. Just wait. And we have the break of that structure. So we are now waiting for 1-to-1. And price is already down 1-to-1 at this point. Because we're risking about like 60 pips. Price is already down 1-to-1, so you can secure some profit. 120 pips. Yes, it's the take profits are right, please. Again, stop loss is hit, but stop loss was hitting profits. And just look for your next trade. And again, it looks like we're having another one here. There's another one here, another flag here again. So what do we do? We sell 160. sorry, 680. Let's see how much you're resting again. 680. So 140 pips is in order. If you do the math, um, it's just a bit more than 2:1. And in fact, I have to wonder if price is already down 1:1. Anyway, there's no doubt it has here now. 1:1 became 156 pips originally before it retraces again. And then we can secure some profits. This whole price hits our peak profits. That'll be awesome. And it did hit our peak profit, so that's awesome. I've done 7 trades. We've won 6. Let's look for more. And you could have had one here, and this one might be hard to have spotted, but you could have had one here. Because we're in a downtrend, price is making lower lows anyway. So I'm just looking for these flags when price decides to recoil and provides you a few selling or buying opportunities, for example. Can join these two lows. And can place a stop loss. Sorry, a sell stop here in case that level is broken. Again, let me draw this so you guys can see what I'm seeing. Right, we have this flag again. Let me please have this flag again. So if price breaks this level, which it has, we are looking to sell. I didn't set my TP, but let's get to break even and secure some profits first, which we have, right? 640, for example. Also 640, so times 2 is 120. So 180, so 130, which is just about 2:1. It's in order, and you just stop loss to break even. Hopefully, price come on, go to TP. You are so close. Oh, this is crazy. That is crazy. I'll take it. I'll just close it. I hate it when price kind of does this kind of thing. Like just bouncing off of like a level and never actually hitting a TPN. Anyone who trades who's actually trade on who has actually traded just must have like this, has stopping these kind of things. I think we'll look for maybe 2 more trades. And this this strategy is very efficient. It's very simple. If you are able to easily identify these flags, and this is a different structure, but I think it helps us see how the market is going, because it kind of looks like a flag but now. We are just trading flags today. So we have this uptrend. I think there's this recoil. So let's see. And let me zoom in. Right, we have this level as a higher high. Right, so if price breaks, and I think price has already broken it. So let me just use a market order, for example. How about stop loss? Just here. I'm looking for 2 times what we are resting. Hopefully we get it. I don't know if we okay, I think we have at least down 1:1. So we can secure some profits again. Yeah. So 740 being raised if I was right. So sorry. 69 pips. So it's like 140 pips makes sense. It's another already securing something else. About 69 pips, 40 pips. And price is at TP. Excuse me. So let's do our last trade then. But this is even fascinating. Usually when I use this trading strategy, you have win rates of just above 80%. So yeah, this is kind of making sense. But 89 is kind of on the upper end, but yeah, still 80%. And if you are using this 2:1, this can make you a lot of money. 2:1, risking properly, you are using you are making use of if price moves 1:1, for example, you secure most of the time you are in a trade that can hit you. Like for this one, for example, right, you have trade number 6, right, hit a stop loss in profit. Trade number 7 hit a stop loss in profit. You know, those trades all happen. Like trades that hit your stop loss when where is the profit, for example. And it's possible that if you were just not securing profit last time, some price could just have the trades. Like it probably has in an example, for example, like let's say you're even taking profit and you fail to take profit. And as it kind of we already took profit. But if you weren't securing profit, for example, which I do, if you didn't secure profit and price just decided to retrace, there could be a news event, something just retraces, you lose all the profits you were getting, and you are rather ending up with a loss. It's just not worth it. Let's go into our last trade. Um, let's see. I hope it's a winning trade because that's why, but it could be a losing trade. I just don't care. At this point in time, risk reward has done what we need. On a $10,000 account, you need like 17,000 a month. So just um hone it however you can. This is a long time known strategy, but for sure I have a different spin to it. And I think it's a spin that you guys can benefit from. I think this is a flag. Again, let me move this rectangle to show you guys the level of interest already. I think price is already triggering. Just let's buy. I'll use a buy stop. How about stop loss just there? Stop loss. In price didn't even do us a 1:1, and we lost. But this attempt trade 80%. Yeah, this is what I'm usually talking about. Like 80% is out of time. 8 out of time. 8 times out of maybe 10, you win. Either a win with your stop loss in profit or whichever win. His TP, which is definitely the best one. But in the end, it's a winning strategy. You win more than you lose, and when you lose little and you win big. I mean, we had big wins. I had like a $6,000 win, and it was followed by what a 1,500 loss, for example. And then you lost 1,500. And you before that you had won like almost 3,000. That's 280, which is almost 2 times what you lost, right? You just lost, for example. So that's just the power of risk to reward. I hope you guys like the video. If you do, um, leave a like. Just hit the button and let it turn blue. Subscribe if you are new, and follow follow for more content. So we have a lot of content for you guys. These videos are made specifically for people who are beginners who just want to see like profits in the market, and I think it's a very helpful. And you don't need to pay for any course. I mean, you can pay for my course, but I don't need to pay for any course from any behind any paywall. You can see what I have here. And if you test this strategies and you think it will work for you and you want more information or more help, you can then pay for a course, like if you want my help. But I can always help you if you do subscribe. And I want to see the numbers go up. 100 likes on this, and we'll do this over a longer time, so I can help you guys maybe more easily picture these flags and these patterns. So without further ado, I want to say thank you all for being here. God bless you and your families.